Tesla stock projections for the next 5 years. That's what we're going to get into here today in this video. I'm going to share with you all my projections I have for this company. Now, if you're in the private stock group, you already have seen my ultra bearish case, my bearish case, my base case, my bull case, and my ultra bull case in regards to Tesla, my Tesla. But for everybody on YouTube here today, I'm going to show my entire base case for this company. Base case basically meaning what I expect this company to do. Not that things go way better than I expect or way worse than I expect. This is my expectations for this company and the numbers. And I feel like right now, this is a very important video that's needed out there. And the reason this video is so needed, I feel like, and by the way, we're going to go through all the revenue numbers, revenue growth averages, net income growth averages, why I believe the numbers are going to be here, different PEs, so different PE scenarios and kind of what that would mean for the market capitalization, what it would obviously mean for kind of like a return on investment type situation, right? But the reason I feel like this video is so important right now is we're looking at a company that is one of the most talked about stocks in the market, one of the most exciting stocks in the stock market, let's be quite clear, right? Led by one of the most famous people in the world, in Elon Musk. And the stock is down 72.72% this year. Okay. And everybody is so caught up into the short term. Almost no one is talking about anything long term in regards to Tesla. Everybody's just talking about production over the next month and over the next 2 months and how many vehicles are going to produce and deliveries and all those sorts of things, right? And we're very caught up in the short term stuff. And the stock's likely faced massive margin calls, option problems. There's a lot of issues in regards to Tesla's stock price. Plus, you have the Elon Musk saga. You have a lot of worries about the economy in 2023. And all this is like a super cycle superstorm around Tesla. And it's a short-term storm, but it is a storm nonetheless. And that's how you get a stock that's as great as this. And as great as that, you look at Tesla's numbers. I don't care if you're bearish on this company, bullish on this company. If you look at this company's numbers for the last several years, there are some of the most impressive numbers you will find from any public company in the world in terms of revenue growth, net income growth, margins, and I mean out there. And that's why the stock's been one of the best performers in the market over the last number of years. Unfortunately, this year, it's a very, very different scenario, and it's one of the worst performers in the S&P 500 this year, right? Now, I think I need to say this before we get into the numbers. And a lot of my fellow Tesla bulls, you're going to see my numbers here. And a lot of you are probably going to feel like these numbers are lame. I know I've been in part of the Tesla community for many, many years now, many years. And I know there's a lot of people that are ultra bullish on this company, right? And we know Elon Musk always talks about 50% average growth for this company revenue. My numbers are substantially below that. I got to be honest, okay? And so don't hate me because I'm not as optimistic as other folks, but I'm just going to tell you guys, I'm definitely much more on the conservative side when it comes to Tesla bulls than many other folks. But honestly, after this year we've been through and brutalized in the market for the past year, you know, it might pay to be a little more on the conservative side, right? As we've kind of learned, and we got the Fed doing the most, central banks around the world, to be quite frank, being the most aggressive. We've seen them in modern times since the 1970s, right? And so that's some kind of food for thought that we got to keep in the back of our minds, okay? Alrighty, guys, let's go ahead and get into the numbers. Hope you enjoy this. As always, first things up is the revenue, then we'll get into net income, then we'll get into market cap related things, okay? So I have this company growing on average 32% per year on average. I actually believe they're going to grow less than 32% in 2023. That's my personal opinion. I could be wrong on that, but that's what I have them growing out. So first, I think that's obviously way below what Elon has in a lot of my Tesla bulls. I mean, most Tesla bulls I know, when they run their projections, they're running this at a company that's growing revenues in the 40 to even 50% range, right? And so me at a 32% on average for the next 5 years, I know is definitely a little lame for a lot of Tesla bulls, right? So I've been doing about $109 billion of revenue roughly in 2023. They could come under that, right? I basically have them doing 32% on average, right? Like I said, there's going to be some years where they grow less than this. There's probably going to be some years where they grow more than this, to just be quite honest. 2024, as long as the economy is not in complete shambles, it could be a year where they grow significantly over 32%. But I like to just kind of average it out, because at the end of the day, what if the economy doesn't fall off, but then in 2026 the economy falls off? To like try to run a random growth rate here and there doesn't make sense. It's just like, what's the average you're expecting over the next 5 years, right? So 109 billion in 2023, 143 billion in 2024, 189 billion in 2025. I have been doing cracking $250 billion in revenue in 2026, 250 billion there, and then $330 billion of revenue in 2027 in my base case scenario. Now, base case believes auto sales grow each year around the world. ASPs stay consistent. Services grow consistent yearly, which services, there's a lot of different services Tesla already has, and there's going to be more in the future. Just to give you a few examples, there's things you can do with your cars where you can pay a price and get faster acceleration. There's things you can, pay for in your car, like $10 a month I pay for in both my Teslas. Both of them are $10 a month. And basically it's to have advanced maps feature. So it looks really nice on your console, like satellite maps. And you get a bunch of other features in there, streaming music and a bunch of other random stuff. Okay. So there's that. There's things like obviously self-driving, which is, for the full self-driving package, it's $199 a month. So obviously as more and more Teslas get on the road, there's going to be more and more people on the $10 a month plans, on the $199 a month plan, especially as the full self-driving gets better and better over the coming months and years. And so the services business is continue to get much, much bigger, right? You could throw into obviously things like maintenance for the cars. You could throw on maybe Tesla insurance over time if they, go national with kind of Tesla insurance, which, could obviously in itself be an absolute massive service. Imagine if every person that owns a Tesla, or let's not say every person, but a significant portion of folks that own a Tesla, right, have Tesla insurance. That's a whole new massive kind of growth engine for the company. Think about supercharging. I mean, there's so many different ways that Tesla already makes money and can make a lot more money over the coming years from services, right? The base case assumes the energy business remains small revenue opportunity and assumes the economy is weak in some years and strong in some years. The base case does not assume any meaningful revenue from robo-taxi opportunity. Let's speak about that for a moment because that's a big point, okay? In this base case, I don't have the revenue. I don't have robo-taxi generating anything meaningful, okay? I've seen it's taken quite a while just to get Tesla to this moment of full self-driving is pretty darn good. But from what I see, I believe Tesla's at least probably 2 years to maybe 3 years away from perfecting full self-driving, which you can't have robo-taxis until the technology is perfected because the government won't allow it essentially, and states won't allow it. The U.S. government in general won't allow robo-taxis with nobody in it and people being driven around, right? They're not going to allow it until it's perfecting, okay, in terms of a nationwide type thing. So I think we're a minimum of 2 to 3 years away from that. We could be closer to 4 to 5 years. Now, if we're 4 to 5 years, that's until it starts, right? So you're not going to see any meaningful revenue, in my opinion, in the next 5 years. Now, for my ultra bull case, I do have some more robo-taxi numbers kind of hitting, but that would be a very bullish stance, in my opinion, based upon how long it's taken the technology to get here, based upon how slow likely the government's going to be to approve robo-taxis in mass around the United States. I think it's going to be a little bit further out than a lot of us would like, just to be honest. A lot of us would love to see this over the next 1 to 2 years become a real reality and start generating significant revenue. Just don't see it happening. That's my opinion. I could be wrong, and I hope I'm wrong. I hope it's a faster thing than not, but I just don't see it being meaningful to revenue over the next 5 years. If we're talking over the next 10 years, I have a very different opinion. Over the next 5 years, I don't believe it's going to be meaningful to revenue. But Tesla's beat my expectations many times in the past, and so they might beat in this scenario as well. But that's important to understand. So where's the numbers really coming from? It's coming from auto growth. It's coming from Model 3, Model Y, more and more folks as they upgrade vehicles over time, right? And getting a new vehicle, considering EVs. And that we know if you're going to consider an EV, you're going to start and end with the conversation with Tesla, right? That obviously has Cybertruck in there, significantly adding the numbers starting really in 2024 when it comes to Cybertruck. Obviously, you're going to have Semi in there. You're going to likely have some sort of, maybe let's call it Model 2, some sort of smaller Model 3 that will be setting up for the robo-taxi opportunity that could hit maybe 2025, 2026, something like that. But as that kind of ramps, the numbers will be smaller compared to kind of everything else in the business. And then, probably once 2027 hits, that's when it starts really becoming significant, okay? So that's my opinion in terms of the revenue side, okay? Now, let's get to the net income side because this is very important. The net income. And do I expect the company to grow at a slower rate than revenue, faster rate than revenue? Because that's important. A great company, and as Tesla's proven over the past several years, And a great company can grow net income at a faster clip than they can grow revenue. So imagine you're growing, for instance, in past years, we've seen Tesla grow, let's say 70%, but then their net income's up like 200% or something like that, right? And if you're a great company, you can grow revenue maybe 30%, but net income's up 40% or 35% or something like that, right? And so what do I have them doing here for net income? Well, this is what I have them doing. I actually have them growing at the same clip in my base case. Now, my bull case and my ultra bull case, I have some very different numbers here. Let's just put it that way. But for my base case, I have them growing the same amount, which actually would be rather a little more on the disappointing side, in my opinion. But nonetheless, I once again would rather be a little more conservative than not, right? So each year, they're just going to have the same amount of net income growth as revenue growth, right? So net income 2023, I have them doing $17 billion. 2024, $22 billion. 2025, just under $30 billion, $29 billion there. $39 billion in net income in 2026 and $51 billion of net income in 2027. Net income growth assumes Tesla will not make any significant progress on margins. My bull case and ultra bull case have a different opinion on that, but my base case, no significant progress on margins. Net income growth assumes Tesla does not have anything that harms profitability in any major way. My bear case and my ultra bear case definitely gets into some numbers where competition creates problems for Tesla. And, obviously they have to do price reductions. They have to be very competitive around price, and margins take a hit in that scenario. Tesla has proven the ability in the past to grow net income faster than revenue. This case assumes the same rate of growth for net income as revenue, right? Now, important to note, all companies do not perfectly grow year over year, right? Which is something I spoke about earlier. Some companies grow or shrink faster than expected, depending upon many factors. I run projections with consistent numbers since it is impossible to predict freak years of economic growth, recessions, geopolitical issues, Rona, things like that can happen, right? And so, I think there's a lot that's going for Tesla. We have to remember, okay, Tesla's a new profit company, like a new positive net income company. Tesla was losing a fortune just like 4 or 5 years ago. Go look at Tesla's income statement 4 years ago and tell me what you find, okay? Go look at it even 3 years ago. Go look at it 5 years ago, 7 years ago. The net income statement was a disaster, right? The company was losing a fortune, and they just started reaching profitability in a significant way, right? So we got to understand, this company's still in the early days of margins, still in the early days of profitability, and they likely have a long way to go in terms of just figuring out smarter ways to do things, cost savings on vehicles. So even if they brought down the price of a vehicle, there's definitely potential that even if they brought that price down, they could offset it because of cost savings. And that's, I think, something a lot of folks aren't kind of factoring in this, right? Meanwhile, their competitors, if we want to call them that, right? Everybody else that's going to try to sell EVs has a very tough proposition in front of them, where a lot of these other EV makers looks like they're going to lose money on vehicles they're selling, right? And so Tesla has a lot of experience over these guys. Remember, Tesla's been building EVs for over a decade. A lot of these other big auto manufacturers, right? They just started really getting into EVs and researching these and really developing. A lot of these companies just started in the past 2 to 4 years. So, you just got to keep in mind Tesla's years and years in front of their competitors, okay? And so I think that's something important to factor in there. But nonetheless, I'd rather be conservative than not in regards to this, okay? So what does that mean for overall market cap of Tesla over time, and what do I think is a fair market capitalization, or what do I think is a fair P ratio for Tesla over time, right? Well, let me answer that first, okay? I believe if Tesla's a company that's growing consistently 30%, I'm not talking 40%, I'm talking 50%. I'm talking if they can grow consistently 30% net income revenue, I think this company is no doubt in my mind that they should be able to command a 30 to 40 PE. The market in general trades at 20-ish PE, but the market in general has 4% growth, something like that. It's a very small amount, right? Tesla's obviously growing massively, outgrowing that. You could make an argument that Tesla could even trade at a 50 or 60 PE. And that's pretty fair as well if the company's consistently growing at 30% clips, right? But we got to understand the market's always going to have this long-term fear about Tesla and competition, all the bear concerns, right? So that's why the highest I go is 50 PE. I won't go above that just for the mere fact that I don't want to trace in scenarios where the company trades at a 70 PE, 100 PE or something like that, even though you can make an argument that might be fair, because if you're looking at something like a PEG ratio, right, the price to earnings growth, I think that's an important factor as well, right? But nonetheless, I digress. 30 to 40 PE is kind of what I'm thinking is fair, in my opinion, for a company like Tesla that's growing at these sorts of rates, okay? So if you're going to, basically this year, if you're going to slap a 10 PE on it, or 2023, 2023, I had them doing $17 billion of net income, right? You slap a 10 PE, that's $170 billion market cap. Right now, the company's trading at about 350-ish, somewhere around there. So basically, that would mean the stock would have to drop another 50% from here, right? But once again, does it make any logical sense for anybody that knows anything about valuing companies that this company should trade at a 10 PE? And the answer is absolutely not, okay? That makes no logical sense whatsoever, that a company like this should trade at that. Ford, or a company, Ford's supposed to grow revenue 3% supposedly. That's what analysts have them growing in 2023. Yeah, and they're having to try to transition their entire business model over to EVs over this next, 5 to 10 years. I think you can make a strong argument that they should be valued at a 10P, but not Tesla, not this sort of company with this sort of growth. That's ridiculous, okay? Now, if you're going to slap a 10P on them, right, based upon my net income here for 2027 projection of $51 billion, that would be a $516 billion market cap, which would be a decent return on investment. We're at about 350 market cap right now, but obviously not too compelling nonetheless, right? Especially for a stock like Tesla. 340s at a 20 PE there. We're just over $1 trillion if you're going to value this at a 20 PE based upon the net income there. I think the only way you value it at a 20 PE in 2027, if they're doing $51 billion and the company's valued just over $1 trillion, so 20 PE, I think the only way you do that is if you're convinced that Tesla's going to grow at single digits in future years. Like if you think, it's been growing at about 30% clip for the last 5 years, but now it's going to go down to 5%, I can understand being at a 20 PE. That makes sense in that scenario. But the thing is we know Tesla's a growth beast, and they're likely going to have still significant growth, double-digit type growth, even after 2027, right? Because then the robotaxi opportunity, and imagine the products and services. Tesla hasn't even launched yet. That they're going to launch in 2023, 2024, or 2025, right? I know they're working hard behind the scenes. Let's just put it that way, right? 30p, 510 for a market cap there, $1.5 trillion market cap there, which, the company at its peak was at about a $1.2 trillion market cap, right? But the stock for at that moment was very overpriced, right? Because if you're valuing the stock at late 2021, early 2022 at a $1.2 trillion market cap, it's very overpriced at that moment because you're pricing in so many years of growth. I think a $1.5 trillion market cap is very realistic for this company in 2027, right? Which would be a phenomenal return on investment if that did play out that way, right? When you're talking about a company that's valued at 350, right now, never mind if the valuation continues to shrink and goes to 250 or 275 or something like that, right? To 1.5, that would be pretty darn amazing, right? And once again, that's at a 30p. It's not like it's high. 40 PE, you're at 680, 2023 there, and you're at about $2 trillion for this company in 2027, right? And we know Elon Musk has gone on record several times. He believes the company is going to be the most valuable company in the world, exceeding Saudi Aramco, exceeding Apple. We'll see what happens there, right? And then at a 50 PE, we're at a an $850 billion market cap there, and we're at about a $2.5 trillion market cap in the 2027 numbers there, right? I run everything from a 10p to 50p on projections. It's not up to me to decide where the rest of the stock market pays for the stock, right? Running all these different projections allows me to understand where it could be valued in different scenarios. The stock market tends to overprice or underprice for stocks, as we know, right? It goes so far to the extremes, it's ridiculous. It's so far to the extremes, right? Valuations are determined by interest rates, growth rates, investor risk tolerance, among many other various factors there, okay? So, nonetheless, those are my projections there. Let me know in the comments section what you have Tesla doing for revenue and for net income in 2027 specifically. I'd really like to hear that and what you think is a fair valuation for this company in 2027, because that's what my eye's always on is 3 years out, 5 years out, even sometimes 7 years out in regards to stock, but 3 to 5 is kind of my ideal. So that's kind of, I'm already thinking about 2025 to 2027 and where Tesla could be potentially valued there. I'd love to know your guys' opinion in the comment section. Let me know. All ears all the time. Much love. And have a great day. And once again, if you're in the private stock group, check out that video that goes into the ultra bear case, the bear case, the base case we just went through, the bull case, and the ultra bull case. Thanks for watching and have a great day.